Welcome to Gossip About Gossip, powered by Hedera Hashgraph. In each episode, we'll cut through the hype of blockchain promises and explore real-world examples of organizations creating the next generation of decentralized applications, which will bring trust back to the internet for us all.
Hello, everyone, and welcome to the latest episode of Gossip About Gossip, the podcast where we talk about real-world applications of distributed ledger technology. My name is Zenobia Godschalk, and I'm the SVP of Communications here at Swirls Labs, helping to grow the Hedera ecosystem. Today, I'm joined by Simon Barnby from Archax, which is a regulated digital asset exchange, broker, and custodian. Hi, Simon. How are you?
Hi, nice to be here today. Thank you.
Good. Okay, so Archax has been in the news a little bit. We'll get into sort of the relationship between Archax and abrdn and the use of Hedera. But if you can just take folks back a little bit and talk about what is Archax, how did you develop and what is your role there?
Sure. I guess if you kind of look back to the origins of Archax, firstly, we're the core team here at Archax, we all come from traditional financial markets. So we've all worked at banks, brokers, regulators, exchanges, asset managers, hedge funds. So we come from that kind of regulated institutional financial markets world. But, back in, 2017 and maybe even before, kind of big believers in what was happening in the crypto space, what was being pioneered by protocols like Bitcoin and then Ethereum and Hedera and others. And excited by the innovation that was taking place there, but also really excited by the possibility and opportunity for that technology, blockchain, DLT technology, and concepts like tokenization to really revolutionize and disrupt traditional financial markets. And if that is something that's going to happen, then we realize that someone needs to build institutional grade regulated market infrastructure that can facilitate that can build a bridge, if you like, between the cool crypto world and the more traditional regulated financial market space. And that's really what Archax is all about. We've spent the last few years building technology, institutional technology, getting regulated by the FCA, raising money to keep us going and to get us where we are today, which is in 2023, rolling out our first products and services. So, it's been an exciting journey so far, and the next phase is just beginning.
And that's no small feat. You're essentially recreating the entire, financial services infrastructure under a new paradigm and having to work through a lot of, regulatory uncertainty to sort of probably help these folks understand what this technology means to financial services.
Exactly, yeah. When you start a journey like that, even though, we were a fairly credible, experienced team, you don't know what you don't know. And along the way, you find out all sorts of things that need to be solved, all sorts of problems with, revolutionizing the way things are done, technology hurdles, market infrastructure hurdles, regulatory hurdles. But thankfully, we've navigated them all successfully so far. And are hugely excited by the opportunity and the possibility in front of us.
Very exciting. Well, yes, so that was a big undertaking. You've worked through the years to sort of get that ready for prime time now. And so can you talk a little bit about, what the customer experience is like in Archax and what kinds of services you're offering today for customers?
Yeah, probably a starting point is maybe to touch on the regulation that we have in place, because for us, regulation is key. For the last few years, we've always been talking about the regulation we have, the regulation we're getting, because we thought that was key. And in fact, what happened in the crypto markets last year and into some of this year just highlights the need for a regulated approach. But the regulations we have, so, we're based in London, although it's a global initiative at Archax, we're regulated by the FCA as an exchange, a broker, and custodian, and we're on their crypto asset register as a VAS, a virtual asset service provider, as well. And those regulations give us what we need to launch. I mentioned earlier we're kind of rolling out products this year. We kicked the year off with our custody solution, so we're a fully regulated custodian here in the UK, qualified custodian in the US. And the regulations that we have mean we can custody everything from, unregulated assets like Bitcoin, HBAR, and other sort of crypto native instruments. We can hold regulated tokens as well, like tokenized assets, tokenized real world assets, tokenized funds, real estate, debt, equity. We can hold traditional instruments also, and we can also hold client money as well. So we're fully, quite a broad range of custody services, and we're busy onboarding people onto that custody service now. We have circa 100 million of assets under custody. They're in place or coming very soon. And we're kind of finding that even though many crypto assets remain unregulated in many jurisdictions, actually being a regulated custodian and people knowing that you're operating the service as a regulated custodian, regardless of the asset in question, is quite an attractive place to hold assets. It's a safe harbor. So the custody service is progressing well. Soon after that, we launched our primary market. So this is a market where we can help firms raise money. We've got around, I think, 7 or 8 issuances up on our primary market at the moment. We've helped one firm close its raise. We've got another couple that we're helping with. So we can help on that sort of fundraising journey for either digital issuances or regulated issuances, but they tend to be fintech or crypto-related firms. We also have our tokenization engine we launched earlier this year, so we can create tokens on a range of protocols. So we have that ability, to help firms raise money, to create the tokens that they wish to have, and then to custody them also. And then the final piece, which is launching at the moment, is our exchange. There are 2 markets on the exchange: an unregulated market with cryptocurrencies, pure cryptocurrencies on spots, and then a regulated market, which is where sort of tokenized real world assets can sit and trade. So we kind of have both those pieces too. And alongside all that, we're kind of looking at creating some of our own digital structured products, tokenized products as well. So as well as being a marketplace for people to come and list, we're also creating issuances that we think will be interesting to institutions generally, because our focus is very much institutions or professional investors and above anyway.
And, I think you are touching on a theme that we have heard a lot this year, which is that, you have sort of this merging of asset classes and of functionality. I've never met a person who says, yes, I really enjoy managing all of my different products and assets across multiple different logins and financial institutions. And I love having, 17 usernames and passwords and complicated access to each individual asset. So it does feel like, there is this recognition, as there has been in other, technology shifts and other probably financial services shifts, that, treat assets as just different asset classes, but be able to manage them simply.
Yeah, I think so. And, there's also a generation growing up that are very used to taking control. They're very crypto friendly. They're used to the way things work in the digital crypto space. And this idea of investing in things through a broker or through some intermediary is quite alien. So I think, the future is definitely digital. The future is definitely giving people control and allowing cross-asset collateralization, as many different assets available in the same way as possible. And it opens up all sorts of interesting possibilities. I mean, you only have to look at what's being pioneered in the DeFi space at the moment and think, well, if we could actually package up regulated traditional financial instruments and take advantage of some of those DeFi offerings, then that unleashes a whole world of opportunity also. So, it's an exciting space right now.
Yeah. So, a few weeks ago, we saw an announcement with Archax and Aberdeen. Can you walk us through that relationship?
For sure. I mean, the relationship with Aberdeen started a while ago, actually, maybe even 2 years ago, when they are pretty forward thinking and they could see that the future of their world is digital, but weren't sure exactly how to get there or how long it might take, but realized if they didn't get on the journey, they might get left behind. So they actually started working with us on kind of like a proof of concept to tokenize funds and to explore that side of things. So the relationship with them started on, exploring tokenization of funds, basically. And as that project and that relationship moved forward, and we started to raise money, we did a Series A round last year. They expressed an interest in investing in the business. It was a close relationship. They wanted to be more closely involved. So they ended up investing in us last year. they're now our largest sort of external shareholder. So we have a very close relationship with abrdn. Not exclusive, by the way, and they're very happy for us to work with other asset managers than we are, because that's vital for our success, but obviously very close with them. They're on the council of Hedera as well. They're big believers in the sort of ESG credentials of the protocol. And Hedera actually, being totally open, are an investor through grants in us as well. So, we have a close relationship with Hedera. We have a close relationship with abrdn. abrdn have a close relationship with Hedera. So, certainly the three of us working together on some projects. And the first of those actually was to create a sort of tokenized version of their multi-billion-dollar money market fund. And that's something we completed quite recently. A few weeks ago, we announced it. And I think that just heralds the what may come next, creating these sort of digital representations of very traditional instruments. And actually, the abrdn money market fund is interesting because, at the moment, maybe you're a hedge fund trading crypto, trading Bitcoin, and you want to go risk off, then really you end up sticking your money in a stable coin because you don't want to bring it back out into the fiat system particularly. But actually, the abrdn money market fund in token form is a pretty stable institutional grade product, and it generates a yield. So it's an attractive instrument to have at your disposal alongside others. So, I think it's, the technology and working with people like abrdn is sort of allowing us to innovate and create interesting products of our own, and with partners like abrdn, which we think will be very compelling for people to use.
And so let's break that down a little bit for those who are not in financial services. So abrdn's money market fund now is tokenized through Archax, which means that people can buy, a fractional share of that using either fiat or crypto.
Yeah, I mean, in essence, we haven't tokenized the whole fund. The fund still exists in its traditional form. I mean, what we've done in this case is to tokenize an investment in the fund. I mean, that's kind of like a first step. So, you take a portion of the fund. Yeah, exactly. And you tokenize that and make it available on the Hedera blockchain in this example. And then, yes, then that does mean that in the digital world, you could bring fiat in. You could bring crypto in and change it and park funds in the abrdn money market fund in token form.
Yeah, it's an interesting twist, right? It is I think people often think about, well, gosh, am I going to take, money out of my fiat or other equity holdings and invest it in crypto? But, it sounds like you guys have flipped the script in some ways and saying, can I use my crypto to invest in more traditional asset classes?
Yeah, I think so. And I think, you could argue, well, why bother? You can just invest in the abrdn money market fund anyway, which is true. But I think the thing is that technology allows you to do things differently. I mean, it does open up a whole new kind of universe of people who would not normally ever think of doing something to be able to do it more easily. So it does open up a new sort of investment community for the money market fund. As I mentioned earlier, sort of holding money overnight or for a period of time whilst you're not using it for investing, but keeping it in digital form is very attractive. That wouldn't happen with the traditional version of the fund. But actually, looking further forward, it presents all sorts of efficiencies. I mean, tokenization is a much more efficient way of handling financial instruments when it comes to things like, not just relevant to funds, but are relevant to all financial instruments, handling things like corporate actions or dividend payments, or, you can kind of airdrop things to wallets. You can do things in a very efficient way. You can have a connection directly with your end user investor in a way that kind of gets masked in the traditional world. So, it opens up all sorts of interesting opportunities.
Right. And the speed of that too, right? It's not hey, you have to wait 2 days for a confirmation or something like that.
That's very true as well. And actually, in the case of funds, sometimes if you invest in a fund, your money is tied up until the next redemption cycle, the next window when you can do something. If you can create a tokenized version and have those tokens traded on a secondary market like Archax, then, you can trade outside of redemption cycles. Your money isn't tied up necessarily as much as it would be in the traditional world. And that's quite attractive to portfolio managers too, because it gives them a permanent source of capital without them having to worry about redeeming something to fulfill a redemption request. And So again, interesting kind of innovative possibilities and opportunities.
Right. And Simon, how has your experience been? I don't know how much you're involved in the development side, but how has your experience been working with Hedera, working with the technology and the platform? And obviously, you're engaged with the governing council as well.
Yeah, you're right. I'm not involved in the technology side in detail, but being involved in the relationship with Hedera, it's always been a very positive one, been very supportive of what we're doing. We, as I say, we're kind of blockchain agnostic and describe ourselves as multi-protocol. But the reality is, you focus on the ones that client demand, drives you to focus on, and you focus on the ones where you have a relationship and where the technology works and delivers what it's meant to do. And the relationship we've had with Hedera has been hugely positive. And also, obviously the Aberdeen connection helps too. But no, it's been a very strong relationship, and we're very happy. In fact, in our custody solution, we, as well as providing custody, we also facilitate staking for yield returns as well for Ethereum, and we're just adding that in for Hedera as well. So you can do HBAR staking and generate a yield. So very, very close relationship.
All right. And you mentioned a little bit, you're continuing to build products, you're continuing to work with new funds and, organizations. What else can you share with us in terms of what's on the horizon for you all over the next year?
Yeah, I think there's a few things for us. I mean, we're in the middle of kind of rollout and launch of our first suite of products and services, and that's a real focus right now. And sort of proving what we've been preaching for the last few years and sort of delivering some traction. But looking forward, I mean, I mentioned we're regulated here in the UK. I also mentioned it's a global initiative. And generally speaking, if people from around the globe come to us, we can handle them as users or listings or whatever. But to go and promote ourselves anywhere else, we need regulatory cover. We do everything by the book in terms of regulation. So we have regulations pending in the Netherlands that will allow us to passport around Europe again post-Brexit. We have a regulatory application underway in the US. We're kind of applications of various stages in Asia, Hong Kong, Singapore, Australia. We're looking at the Middle East, Abu Dhabi or Dubai. So, over the next sort of year, 2 years, we'll be expanding our regulatory reach around the world. That's one key area. The products and services that we offer, I mentioned these digital structured products, tokenized funds. I mean, we will grow that. We're looking to expand the sort of the tokenized funds offering that we have, looking at potentially investing in hedge funds and tokenizing those investments, maybe even tokenizing a fund of funded investments. So again, all sorts of interesting products there. A capital protect note we're looking at that gives exposure to staking yields. So a variety of things there. I mean, and then I think probably then looking a little bit further still, I mean, we're excited by derivatives opportunities. It's a relatively simple step for us to get a variation of permission from the FCA to cover derivatives. So that's certainly something we'll look at. And then there's the DeFi space. I mean, I touched on that a little earlier. I mean, interestingly enough, recently we invested in Vodafone. So we bought traditional Vodafone equity, and we've now tokenized that equity. So we've tokenized the beneficial ownership of Vodafone, that is now available in token form. And that opens up interesting possibilities. I touched on DeFi earlier. In the DeFi space where you can lend or borrow against collateral, being able to do regulated traditional securities lending, but in the DeFi space, we think is very interesting. So we're kind of exploring DeFi, but with our regulated institutional hat on. It's a little bit the Wild West out there at the minute, and we're not trying to emulate that. But what we are trying to do is leverage some of the things that are being pioneered there in a regulated institutional way.
Fantastic. Well, Simon, before we wrap up, anything else you'd like to share with our audience?
No, I think we've probably touched on pretty much everything really so far. I mean, I would just encourage anyone to go to archax.com and take a look. You can sign up and see our primary offerings, see all about our custody service and our exchange. You can sign up to be a member of our exchange, and we're very keen now to get people engaged and using these products and services that we've been building and we're launching right now.
Fantastic. Well, this is all very exciting, Simon. We hope you will keep us updated on your progress, and thank you so much.
Thank you very much for the opportunity. Thanks very much.